All right, my name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about the difference between an independent contractor and an employee. And what I've seen happen with some of my clients and some of the advisory that I've done is they get tied up or jammed up with discerning between the two. And normally how the scenario goes is that you've had said company, they go ahead and hire someone to work for them, but either at the convenience of the company or the individual, they decide to pay that person with no taxes withheld. So in some instances, the worker will go to them and say, hey, I don't want any taxes withheld from my check. And the client, as the employer, agrees, and they just go ahead and pay them a flat rate. Or the client understands that there are payroll taxes associated with that. The employer realizes that if I have taxes withheld from the employee, there are employer taxes that an employer has to pay as well. Say another 10% or so in taxes that the employer has to pay. So for example, if you're paying someone $10 an hour to work for you, it would actually cost you $11 because that extra dollar you have to put aside for your additional payroll tax. So with some employers understanding that, to skirt that extra $1, they'll just say, hey, look, I'll pay you as a contractor, no taxes for me, no taxes for you. So it seems to be pretty convenient for both parties, right? Both parties are winning. So where I've seen some of my clients get jammed up, let's say that person gets laid off or that person stops working with you for whatever reason. You might have fired them, you might have laid them off, but whatever the case may be, they decide that they're not working for you anymore. That person then goes and decides that they want to file for unemployment and receive unemployment benefits because as far as they're concerned, I worked for this company, I'm no longer working, I want to apply for unemployment and start receiving unemployment benefits. Now, the problem is when that person goes to file for benefits, the state look at the records, and as far as they're concerned, you didn't work, you didn't have a job. Why? Because you paid them as a contractor. That is not a part of payroll. So when people receive unemployment benefits, that is strictly for if you were an employee. So when folks get paid with no taxes, you're not being paid as an employee. You're being paid as an independent contractor. So many of these folks don't realize that. All they know is I'm not paying taxes or I'll pay later, but realizing that they are considered an independent contractor and not an employee. So when the time comes for unemployment benefits, they don't qualify because payroll taxes haven't been paid towards that unemployment insurance, which comes out of payroll taxes, which you were not paying, nor was the employer. So that's the problem described. So if that employee is not educated about their employment status, they raise their hand and say, what do you mean that I'm not an employee or there's no record here? I worked at this company, they paid me. And that can create a problem for the employer because you hired this person, they're claiming you're an employee, you paid them, but you didn't report it as employee wages. You employed them as a contractor, and now there's a discrepancy between the status. And if an investigation is done and they find out that you were indeed paying someone as a contractor, but they were indeed an employee, you can get into some substantial trouble because now they're viewing it as payroll tax fraud, that you're avoiding paying your payroll taxes. So that can create a pretty hefty issue when folks aren't necessarily clear about their status. And that is a risk that you take when you decide to pay someone as a contractor when they are indeed an employee, that you always have to worry about. That person may not work for you forever, and if they decide to either get their unemployment benefits, which they won't have, that will make someone pretty angry, or they know what's up and they just decide to blow the whistle on you. So you have to be very careful about that when you're starting to bring people on and pay with no taxes, pay contract route when they are indeed an employee. So for those that might be in those sorts of relationships with employees or people that you hire, if such a claim were to come up, I wanted to go through some of the things that usually the Department of Labor that'll take a look at that. The IRS may get into that as well, but you'll have issues with both the Department of Labor and the IRS, because both are looking for payroll taxes for you to pay. So if you were to ever get investigated over the status of a relationship that you have with someone that works for you, there's a list of, I'd probably say, about 20 different things that they look at together. So it's not just one thing that they look at and you're classified as one using this method, this point. But then if you look at the other point, it leans more towards contractor status. They take all these points, take a look at the relationship, and look at everything in aggregate to see what the nature of the relationship is, to determine if one is actually an employee or an independent contractor. One of the things they'll take a look at is the flexibility of time of that person. If you employ someone, do they have the flexibility to work when they want to work? They'll use myself, for example. A lot of people hire me to do their tax. There's a fee structure, they pay for it, I do the taxes. Now, my clients don't dictate to me when I'm supposed to actually work on their return. They pay me, they have an expectation of having the return done. I try to do it within a reasonable amount of time, but nonetheless, there's no set dates or times that I am instructed to work on that particular return, because it's a contractor relationship and I'm not an employee of my clients. They don't dictate to me when I should be working. Now, on the other hand, if they came to me and said, we need you to work on Mondays and Fridays between 8 and 2. So they're dictating the time that I'm supposed to be working. If you are doing that with someone, that leans more towards an employee relationship, because you're dictating the terms of when that person should be working. Another thing is, does that person offer their services to others? Meaning, do they work for more than one person? So again, going back to me, absolutely. I offer my services to the public. I don't do work for just one person. I have many clients. So that would fall under the true definition of a contractor. But on the other hand, if you have a person that is, as far as you know, working solely for you, that leans more towards an employee relationship. Another is, how is the pay determined? How do you pay this person? Do you pay this person by the hour? Is it a flat rate? Going back to myself, if I'm doing a simple tax return, it's usually a flat rate. So we figure out what that rate is. I finish the project, I get paid. But if you're working with someone that says, we'll pay you for every hour that you work, and that's the ongoing payment arrangement, then you could be in an employee relationship. So another factor is, do you dictate how the work is to be done? Do you have policies and procedures or methods that you want that individual to perform the work? So going back to myself, no one dictates how the work is to be done. They ask for a tax return, I simply deliver a tax return. Nothing goes into it as far as how it's supposed to be done. They just know that they're supposed to have a tax return at the end of the project, which would indicate more of a contractor. But if you are dictating those terms of how the work is to be done, that bodes more towards an employer-employee relationship. Another thing to take a look at is materials. Who provides the materials for the work to be done? Usually the contractors provide the materials themselves. Again, with myself, if I'm preparing a tax return, I have my computers, I have my printers, I have software that I use, which I have to provide myself. My clients don't come and provide that stuff for me. It's an expense that I have to incur to perform my duties. That leans more towards a contractor. But if the contrary is true, and you provide materials, computers, supplies, things of that nature for that person to do their job or do what it is that you're asking them to do, that leans more towards an employer-employee relationship. And lastly, if that person needs to travel, who covers that? You cover that as the employer, or is that person responsible for paying on their own? Now, this can be a little gray, this particular example, because I know that even with my clients, if I am required to travel, I just go and bill the client. So the client is ultimately paying for it, but I'm still a contractor, because when we take all those other factors into consideration, it heavily weighs towards myself being a contractor. Versus if you have an employee that's traveling, you naturally would cover it. Or I've seen it where employers would reimburse, but it's clearly an employer-employee relationship. So it goes back to what I was saying in the beginning, that all of these factors are taken into consideration and not just one. So those are the major factors that determine the nature of the relationship. So if you're in that situation and you're paying someone with no taxes withheld, consider those items, evaluate that relationship. And if you are leaning more towards an employer-employee relationship, then you may want to look into setting it up on payroll. I know that's something that most folks don't like because they now have to pay taxes, and now that paycheck is less, and they may come to you to make up the difference. So it can cost you a little more money between the payroll taxes. And if you're in a workers' comp state, then you also have to pay workers' comp insurance, which is a small percentage of the payrolls that you pay out. So you may need to look into incurring those additional expenses. However, you're de-risking yourself from the downside of possibly being reported for not paying someone as an employee when you're supposed to, which can lead to a number of fines from both the Department of Labor as well as the IRS as far as tax fraud and tax avoidance. Fines in some states are pretty outrageous. So, for example, I know New York, they have a fine for like 10 grand for like every week or something like that, you're not in compliance with workman's comp. So there are a number of consequences that come with that, and it can be pretty costly. So paying the few taxes and insurance may pale into comparison to what the penalties could be for not being in compliance. So that's all for now. So if you have any more questions about this or any other accounting or tax issue, feel free to reach out. I'm happy to help. So that's all for now, and I'll talk to you in the next one.